All right, Matty, happy April Fools, April 1st here. And Matty, I was telling you before the show, I was trying to get together a April Fool's joke for the team here. We're selling our XRP, we got rid of all of our Casper. But I really want to focus in on today's show. We have a lot of good topics today, and we're not going to be able to give you an April Fool's joke. Matty might. I unfortunately won't. Your portfolios are already a joke, team. Maybe. So, or if you're just getting in, you don't have a portfolio yet. So we really need to lock in with you guys today to level up your game here. Matty, April 1st is today. Very good predicament we are in right now. Like I was telling you before the show, we've seen Bitcoin last 8 months, 7 candles up in the green, and then this last March, a red candle. What are we looking for on Bitcoin here? What does performance look like maybe for this month, which I know you hate that, but I want your analysis from that perspective. And then we're going to get into some analysis that people are having. I think my mic is too loud. I'm going to turn it down a little bit. But then we're going to get into some analysis some people are having. They're throwing out Bitcoin predictions left and right here, Matty. So we'll get into that. But give me some of your thoughts about Bitcoin as we are going into April now.
Sure. I think that I'm probably the only person in this market that at this point seeing this type of price action is really welcoming this type of corrective behavior. You see these back-to-back weeks, like we talked about, of markup, very little correction. We had a couple instances where we had like a little bit of sideways flagging action. It's still, to some extent, what we're seeing now is really more sideways action than markdown behavior. And, if we saw through April an entire month of markdown and corrective behavior in the markets, it wouldn't make me any less bullish on the market. In fact, it would make me a little bit more bullish on the market. So, at some point here, I think we needed a cool off period. I know everyone looks at previous fractals and they go up, 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 up. That's the only way this goes, right? We have two examples of parabolas and, they just slam candles back to back with maybe one or two monthly candles, offering a little bit of a pullback, but that's it, Matt. That's what we're doing here. But markets do need to cool off. We definitely started this cycle well ahead of all of the other fundamental indicators that we previously relied on, including the halving cycle, which we've discussed many times. And moreover, though, the macro environment where the Federal Reserve has paused rates, which is good, right? So we're not hiking anymore. Talks of cutting rates, which would be a quantitative easing environment and allow risk on assets like the stock market and the cryptocurrency market to do quite well. But we haven't quite gotten there yet, right? So seeing all this price action well ahead of both of these things does make me a little bit cautious, and I would like to see maybe a month, even maybe 2 months of markdown before seeing another big, impulsive wave up. So, the market's going to do what the market's going to do. That's ideally what I would like to see over the next month or two.
T, we're going to continue this conversation right now, but I do want to interject because I don't want to get so late in the show where we talk about what we're going to be getting to. If I didn't introduce, we are, this is the After Hours show. I am Gavin. This is Matthew Breenan, and we come to you on behalf of CryptoCharge, where we are an educational platform where we provide education, daily shows, tools, and our community is accessible through CryptoCharge, and we have our community in the Discord. So you join us there. And I do have to say, I need to start telling you guys to be a little bit more actionable here, because you guys watch our videos and then don't help us out. You guys don't give us a like. You guys don't comment. It's something like, you guys don't help us out at all. You guys just take this content and go out in your daily lives. And it's just bruh. So anyways, team, watch through to the end of this show here. And if you like it, leave a like, please. That greatly helps us. We need a couple hundred likes here on this show. We need to keep growing. So please do that. But also, too, Matty, is there anything you want to share before we get back into this Bitcoin? Because I do want to ask you about some of these other people that are throwing down Bitcoin price predictions.
Yeah, like Gavin said, really it helps us a lot when you guys, engage on these videos. If you got any value from it at all, genuinely, even if you don't sign up for our program, leaving a comment, leaving a like, that helps us tremendously. Because even, outside of, our company growing as a whole, which of course I want to educate people, I genuinely want this information that we're putting out here to go to people who maybe even can't afford the information right now. So, the more you guys interact with this content, the more people are able to get this kind of information that you guys know is valuable, to somebody who's new to crypto. So absolutely that. And, like we've talked about, here at the top with the Bitcoin market, I think what we're seeing with the altcoin market could be a little bit messy over the next month or two as well, potentially. But that doesn't mean that you guys should be afraid. In fact, a lot of you guys are getting into the market. You guys are new to the market. These are great opportunities. I've had a lot of things on my hit list I was patient with. We actually just added something today I brought up on the show over a month ago. So there's a lot of opportunity out there right now. So don't feel like, hey, Bitcoin's at this much. Should I buy Bitcoin? Don't worry about Bitcoin. There's so many other opportunities out there. And I don't want you guys to FOMO in. There's so much time left in this bull cycle, I believe, for you guys to really make some great profits. So again, be patient. I think that there's a lot of great assets for you guys to get involved with, even at this stage in the cycle.
Team, we have a lot of good things on tap for today. We are going to, finish up this Bitcoin conversation right now, which we're going to get into some interesting price predictions with Bitcoin. We're also going to briefly talk about exchanges. There are some concerns that we'll just briefly touch on because we've touched on enough, and it's not something that we want to spend a bunch of time on. For the back half of the show, we are going to discuss. We're going to be forward-looking, and we're going to look, because this is the moment for that. We haven't taken profits really on our crypto. We've either, taken some profits and rolled it into crypto. But I'm talking about like post-bull run profits, all sitting in USDC. What happens after that? And a lot of people, I was telling Matty before the show, a lot of people are talking about nonsensical things right now that don't matter to the regular investor. And if you are here watching us right now, we want to provide actionable things. We try our best as we can here. We have a platform for those things, so we try to give you as much as the rope here. But if we're not giving it all, it's because we're holding back because we have a platform for that. Okay, but we want to have a good little roundtable discussion about what Matty's doing post bull run. I will give some of my thoughts as well because I was just asking the Discord. I'm like, hey, what are you guys doing post bull run? And we got some interesting responses that I'll share with you guys, and we'll share what we are doing. So a lot of good stuff today, team. All of that and more, so stay tuned. But let's talk about Bitcoin really quick, Matty, our favorite asset. It seems like everyone is throwing their hat in the ring for Bitcoin price predictions. I have a couple listed right here. Mark Yusko, 150K. Kathy Wood, she's always done this price by this date, looking, deep into the future, like 2030 and 2050, calling out like, $1 million Bitcoin or whatever. Rob Kiyosaki, 30K by the end of this year. So obviously, Matty, I have to ask you, what is your Bitcoin prediction?
So you guys know that I absolutely despise timeline predictions. I guarantee you, if you guys go look at everything that everyone was calling out, 2021, 2022, this price by this date, I guarantee you 99.9% of them are wrong. And people like those articles and they like those predictions because it makes them feel like they can do something actionable based on that timeline. But the reality is you guys should not be relying on timelines like this, strict timelines especially, for your investing, because you will be 9 out of 10 times sorely disappointed and potentially in a bad financial place because you are trying to take dollars that you cannot afford to invest and investing them on a very strict schedule. So again, I'm never going to give you guys a piece of advice, even though we don't offer financial advice here, that would be contingent on a timeline. Now we talk about cycles. Cycles are kind of like a non-binary indicator, right? They could be a 12-month cycle. It could be a 24-month cycle, became an 18-month cycle. There's a lot of different things that we can look at. Now we can look at previous cycles and go, hey, economic expansions generally, 16 to 24 months. And we could say that that's about the time that we would expect maybe this to happen. But you can always be wrong, and economic expansion goes on longer if the Federal Reserve is very accommodative with the rates, or maybe it's cut a lot shorter if they decide, hey, inflation is a lot more sticky than we thought. We have to start hiking rates again sooner than expected, right? So we can try to take all these intangibles and try to form a timeline perspective. But in my opinion, it's just a complete waste of time. As far as these price predictions go, 150K, I don't think is unreasonable. That's the 2.618 looking at the previous cycle high, cycle low. So looking at the 2022 peak and then the 2022 low that came in there, puts us around 150K for a 2.618, kind of in the middle of top end of expectations, and kind of first target there at the 1.618 being just over $100,000. So I think that's probably kind of the sweet spot to be. I'd say that you're probably going to piss off a lot of Bitcoin maxis by suggesting that 150K could be a top. I don't think that's unreasonable. Again, guys, 150K per Bitcoin, 21 million Bitcoins. Like, it's a lot of money that needs to come into this market. I'm not saying it's not possible to exceed that, but like, each and every cycle, when you get these larger caps, they continue to get bigger and bigger. So what happens? You need more money to jump into it to make it even bigger. Same thing with the gold market, right? Gold will eventually get so big, and there's really, again, regardless of how scarce it is, there needs to be that demand there in order to accompany a much larger market cap. As far as, did we say 30K is one of the predictions, Gav?
Oh, yeah, it's 150 by Mark Yusho, 300K by Rob Kiyosaki, and Kathy Wood, Kathy Wood.
Right,
for the last couple years, she's been throwing out like million by 2030, this by that, so.
Yeah, and let me say this though. I don't think Kathy Wood is an idiot. She obviously has garnered respect for being in this industry for a while. One of the big plays that she was very incredibly right on was Tesla. She called almost the last Tesla top to the peak. Obviously, they did that split share, so that brought the price down significantly from there. But it doesn't matter if you were the holder then. Your value is the same. So, I don't think she's incorrect in her price modeling with a lot of things. However, when you look at Kathy Wood's modeling, one, she looks at like all of global GDP basically running over the Bitcoin rails, which I think most of us agree is really stupid, right? Bitcoin cannot be the only facilitator of payments. Not possible. I think that, again, there's a reason that we're going to see a lot of DLT solutions come forward here. So honestly, I'd say be somewhere between 150 and like 220 is like a very reasonable top end expectation for Bitcoin. And I think that we're kind of on the money here for the most part. But anyone that's telling you 500K by end of year, $1 million in the next 2 years, I mean, come on, like let's do some math here. Like what kind of catalyst do we need to actually drive there? Hopium alone is not good enough.
Valid, Matty, valid. That is the exact answer I wanted from you. Team, if you want to look at the coins, they're in the coin library on the website, so you'll get a very decisive, 1, 2, 3 price target there. But now, Matty, I want to move quickly. We'll briefly talk about this, and then we'll get to like the heart of our show and the message we're trying to get across here. But quickly, I opened up Twitter this morning, and I saw some things like people are, either getting emails from MEXC, and this happens when they find out your location and that you're not in Australia. You go into MEXC, they're like, oh, where's this IP address coming from? It's coming from America. So, right. Team, obviously, we have been utilizing the MEXC VPN strat right here outside of our traditional Coinbase or if you're an Uphold person, but that's KYC. We're trying to circumvent that using MEXC and VPN. I don't know if that's like a bad thing to say, but I'm just going to be upfront. That's what I'm doing. I don't know what Matty's doing. The government, it's just me. So anyways, that's the strat here. So Matt, what can people be doing? Some people are getting out of MEXC, so it's not everyone. I checked. I didn't get an email. No one caught me, so I'm still using MEXC. Matty, if you were to get logged out of MEXC, because we're really only utilizing it for big limit orders, Casper purchasing, if you were to get out of MEXC, where would you go for some of those purchasing?
Yeah, so here's the thing, guys. When you decide to use a foreign exchange, especially one where they don't let you KYC as an American, that should tell you something, right? It doesn't mean you can't use the exchange, but it means that you're just playing a game that does involve some risk. Okay, right? I want you guys to accept that as a face value fact. That's not my opinion. You are bringing risk into your investing. When you decide to kind of circumvent this KYC process by utilizing crypto. And again, this is something that was not previously very easy to do if you wanted to use like a brokerage for foreign exchange, for example, outside of the US. A little bit more difficult because you didn't have anything other than money like dollars, right, to put on that exchange, and like USD is an automatic no-no on foreign exchanges. So kind of same thing here in the MEXC example. The difference is when you have seasoned assets, and you guys hear me talk about seasoning a lot. Seasoned assets are, hey, I've onboarded my funds onto an exchange that allows me to do KYC. This is typical practices to know your customer. Even when you're doing like soft credit pulls, that's a KYC process. This is a very uniform thing across, not just, crypto exchanges. It's a normal thing you have to do. They also have to comply with AML, anti-money laundering practices. That's what KuCoin's in trouble for right now, essentially continuing to offer services and assets to people who had not practiced KYC or AML. We as consumers are not in trouble for that. We're not doing anything that, will get us personally in trouble. But anytime you use any exchange, even the exchanges that we like and trust, like Coinbase, we don't leave meaningful amounts of crypto on those exchanges. I don't know how many times you guys have to see people get hurt before you realize, hey, this is dangerous. This is stupid. There's no big benefit to leaving all this custody in somebody else's hands, other than the convenience of being able to just click that sell button right away versus taking custody and sell in like a cold storage device. So with MEXC, again, we are circumventing that. We're making sure that our VPN is on prior to logging in. We're not using a phone number. We're using an email. And I know some of you guys are new to this and you think you can just rush through everything without doing all the research and understanding why and how you need to do these things in order to not get your account frozen. You have to really go through this process. So each and every time VPN comes on before you log in, not after you log in. Even if you think, oh, well, it's not that big of a deal if once in a while I don't log on. No, guess what happens? Every time you hit a server, I'm going to teach you guys about the internet really quick. Every time you guys hit a server with any website, that is a logged piece of information when you're not using a VPN. Even if you're using a US-based VPN, every time I hit Google, every time I go to Facebook, every time I go to CoinMarketCap, that is a logged activity. They know which server I was on when I engaged in that activity. So if you guys are constantly being, or if you're being inconsistent with your VPN activity, meaning, oh, it's only on half the time, or I just press OK and they let me trade anyway, that's still a logged activity and they know where that came from. So if later down the line they start going through all these accounts and whatever jurisdiction comes in and says MEXC can't be offering this, that, and the other, and they start shutting down accounts or whatever, freezing accounts, you are going to be towards the top of the list of people they start to bother at the beginning of this process, because you have flagged yourself and made yourself basically a big target. So that is your responsibility to make sure you're doing that correctly. And again, those season funds are funds that are moved over. You obviously make the trade and then take them off exchange, guys. What is MEXC doing for you? They're not doing anything for you. Take them off exchange, even if that means using a decentralized wallet, Exodus, anything other than just leaving them on exchange. I think people think that they're invincible or they're special, and you're not. Bad things happen to good people, and we see this happening with KuCoin. You guys got so many emails from KuCoin from August of last year and to the end of last year. Take them off. Take them off. No more trading after this. No more trading after this date. You guys got literally a barrage of emails about it, and I still have people going, oh, well, I didn't know. Now I'm having trouble selling, or I can't move off XYZ asset. That's your fault. That's your fault. If Chase or Bank of America had hit you up and said, hey, we're closing your account, you got to get your money out of here, we're closing your account, and they'd sent you email after email, is it Bank of America or Chase's fault, or is it your fault that now you have to go through this process of moving money to a new account or whatever? You need to take responsibility of this stuff, and you need to treat these exchanges like marketplaces. They're not your friend. They don't care about you. They only care about making that money, all right? So buy your assets, take them off of exchange. Not to be your dad or your uncle here. I just hate seeing people in bad situations because of laziness. That's really what it comes down to, is laziness.
Great things you had to say there, Matt. Team, if you don't want to hear this ever again, just go down in the comments and say, guys, just get a ledger. Get them off exchange. That's all you guys need to do for your team here to help us not having to keep regurgitate this stuff that you guys keep, honestly bringing to us. And it might be the new people. Just go down in the comments right now and say, get a ledger, get a Trezor, get something that isn't storing your coin or your crypto on Coinbase, exchanges, etc., so we don't have these problems. Okay, let's move on to the last topic here, Matt. We got some time here. Don't let that time fool you. We started a little bit early. But I want to get into Matthew Breenan's mind, and I'll share what I have to say, but I want you to tell us what you are doing post bull run. A lot of people are looking at like crypto bull run as the end all be all, and I simply have a fundamental problem with that. Your life doesn't end at the crypto bull run, and I don't think your peak happiness in life will be at that crypto bull run. Thus, you shouldn't look at that crypto bull run taking profits as the end all be all, where you go and take profits and go on a vacation. Matty will advocate, that's probably fine. I don't want to put words in his mouth here, but for me, like a 22-year-old that's trying to be a wealthy individual, I will never advocate for that. I will buckle down, eat shit, and get your things in order, because I have things that I'm striving for, as many of you. So like I was talking at the top of the show, I went to Discord this morning. I said, hey, what are you guys doing with your crypto profits? And the two people that responded immediately, I'm going to share a little bit of what they had to say. One of them said, what aren't I going to do? And I originally took that. I was like, oh, he's not doing anything major. He's probably doing something similar to Matty. He's probably just going to take profits and leave it in stable coins and wait for the bear market. And so I was like, well, does that mean does that mean no game plan? He's like, I'm just gonna, he didn't explain it. I'm gonna do whatever with 20%. I'm gonna do this with real estate. And when I read whatever with this percent, that hurts me. We do all this diligent work throughout the bear market for a half-ass exit plan. And that does not mean to tear anyone down, but it's like, bro, this is money. Every dollar counts here. And I'm really showing it right now, because I'm telling you, have a game plan. We don't get to choose the outcome of what the ultimate net profit will be, but we do get to chart. We are able to place Fibonacci's. We are able to forecast and take profits in a decisive manner. Like I've said in previous shows, if I am only to take profits on my first price target, I'm okay with that. And if I'm able to do all three, great, God bless me. But I need to have an outlook going after that. So Matty, I'm not going to, take all the time here. I do want to hear from you, obviously. This is why we're here. We want to hear from Matty. Matty, what are you doing post bull run?
Sure. So I think you make a good point there, Gavin. It's not to say we shouldn't enjoy some of our money that we've spent all this time, saving, investing, sacrificing other things in the immediate now to have a bigger reward later. That's, a lot of us have done that. Out of those fun things, I definitely want to do some more traveling over the next, couple of years after this bull run and enjoy some of that from traveling. I personally think that experiences are something that are very valuable. And, I personally enjoy experiences more than physical things. So I definitely will be doing some traveling. As far as kind of reallocating, definitely the big goal here is to preserve as much of this bag as possible and be able to reinvest. I do want to open a short position as we start to get more confirmation that the bullish periods are over and we get some sort of retrace higher and look to engage in some short. So having an active position in the market, even if it's not heavy, right? I'm not saying you guys have to take everything, dump it all into a short position. Shorting is risky. I'm not saying that there isn't, it's a risk-free activity and it's free money, but taking a portion of that, making sure that's active. There's going to be a portion of my savings that just chills in USDC earning 5.1 or 6 or whatever the going rate is in Coinbase, earning a little bit of APY there. Off the bat, obviously, if you guys are making meaningful amounts of money in this market, you want to try to reduce that tax bill as much as possible. Immediately going to go buy a brand new Escalade, and that's not because I'm a bougie person. In fact, I don't even like big cars. I own literally the smallest Audi manufactured in North America. You can deduct the entire price of that vehicle from your tax liability. But when you go to apply for a loan for, let's say, a house or something else of that reasoning, you get to apply as if that entire amount was not taken out of your taxable income there. So it still applies to what you're bringing home, even though you've spent, let's say, $130,000, $140,000 on a brand new car because it's a work vehicle. You need an LLC for this, but guys, again, it's really worth spending the few $100s on the LLC, tucking that into the LLC, and then getting that automatic tax deduction. So that's going to be something small, but it's going to help me along. And hey, who doesn't like to have a nice little truck to drive around? I definitely want to move. So I want to be renting out this house and turning this into a cash flowing property and want to be buying a couple acres and sitting on that. I have some friends that are in, the flipping business, and they're constantly looking for people to loan their money out for, a fixed interest rate for 4, 6, or 12 months. Absolutely interested in parking some money in those vessels. But again, the majority of this money really should be for an investment portfolio. We're investing differently than most people are, right? Because we're being more hands-on with it. We're buying individual assets. We're managing them individually. We're doing swing trades on top of it. So we don't approach this the same way as the everyday investor of, hey, I buy the S&P, I buy the NASDAQ, I buy the Dow Jones, and I have a piece of my paycheck that goes into these indexes every month, right? Or every 2 weeks, or however you have it set up. Maybe you have a 401k stashed up. And those are the hands-off investors, but they don't enjoy these big flurries of profit like we do because they're not trading their portfolio actively. So we still have to have diligence when we take profit and say, okay, yeah, of course, I'm going to take some of this money and I'm going to do some things with it. I'm going to keep the money moving in other capacities, but I still want to make sure that I have an investment portfolio that's moving forward, not just my long-term holds, because not everything's getting sold, right? We talked about this many times that I have a handful of assets I want to keep a piece of. That's my long-term portfolio. Those are my Microsofts. That's my Amazons. Those are my IBMs. But XRP, Casper, those types of things. But we want to make sure that we're able to capitalize on another bear market. Even within the stock market, there's going to be another bear market. Anyone who tells you it's only up from here is absolutely lying to themselves, and they just don't want to think about the PTSD they got from the last market crash that occurred here. So, of course, enjoy a little bit of your money. Of course, you worked hard for it, but let's be diligent with it. Let's make sure we're keeping the money moving and trying to keep as much of our money as humanly possible.
Yeah, I do. Agree with a lot what you had to say there, Matt. And it is good to be, well, it is smart to be diligent with your money. But like I said before, and I don't want this to be for me like going around in circles here, but you do want this money to work for you. And so, like, I just want to share a little bit about me here, because if you'll be able to relate a lot to me more so than you would be talking to a millionaire. I'm someone that just got out of college. I have to pay student loans every single month. I have minimal rent right now, and I have been for the past 2.5 years now, been throwing everything I can into crypto. And with that money, with that profit that I will be taking, if you're in the crypto charge community, you are most likely taking profit. We are not a community that says, hey, we're going to hold our crypto assets for the Pico top and then we're going to watch it go into a bear market. We aren't that people. And so we take profits on our assets and we want to lock in those profits. And that comes with a little bit of headache. You do have to pay capital gains tax, and you do have to, if you want to, facilitate, buy a real estate property, you have to move that, let it season in your checking, savings, or brokerage account for 1 to 2 months. That might sound annoying to you, but if I just made, a couple $1 million in crypto, and I'm 22, like, come on, guys, like, really here. So, anyways, Matty, I did want to share a video, but I would just rather talk about what some of this guy had to say, and this kind of like exemplifies like this whole Bitcoin maxi thing, and this is really how they view it. And I will actually drop the video in the comment section down below, because this is like, I want to show where we're really at here. And one of the things he was talking about, because I was trying to like, I've been talking with Matty lately, strategizing post bull run. I'm a person that wants to invest heavily into real estate. As my, my advisors, the people that are older than me, 40, 50 years old, have, Dan Habib's one of them. He planted that in my ear. He was like, he planted in my ear day one. He let me know. He was like, I come to him. I'm like, hey, Dan, should I buy a property in cash? And he like, I think he might have chuckled. I don't want to like, burn Dan or whatever. But it's like, do you want to be David Ramsey, or do you want to be, I would say Dan Habib. I do want to put him there, but just in case I misrepresent Dan here, I'll say Grant Cardone. Do you want to be Dave Ramsey, who, you're going to pay off your house, you're not going to have a home loan, you're going to put down as much as you can, try and pay off that house, or are you going to use leverage? Are you going to get as many doors as you can? And personally, you can say whatever you want, Matty. We had our conversation about Grant last week, but personally, I want to get as many doors as I can. I want to use leverage, because that's just how, that is just an option we have available here in America. So that's for me. But you don't get there unless you sell your crypto. So now we're going to talk about the people that are anti what we are. I'm gonna play the video, Matt. I'm gonna play the video.
All right, let's check it out.
Just so you can hear exactly what this guy's saying.
I want you to begin really thinking of Bitcoin as a working asset, as a store of value, as a hard asset that you can keep in your family forever. And your Bitcoin can work for you by borrowing against it. And I think you should think of your Bitcoin like owning a Picasso. If your family has a Picasso that's been passed on down through the generations and you need spending cash, you'd be very, very foolish to sell that Picasso just so you could make your car payment or buy some consumer junk. You'd be much better off exhibiting the Picasso, maybe doing a local exhibit, selling tickets rather than selling it.
Rather than selling your Bitcoin. Matty,
Right.
Last time I checked, I can't exhibit my Bitcoin for profit. So like,
Yeah, go ahead and we got a little echo here, Gav. But I think what he's getting at here is something I've discussed many times, which is being able to leverage part of your portfolio in the future and take a loan out against it. And I want you guys to understand this very important fact. Anytime you are doing anything with your assets, swapping assets, anything other than putting the asset up as collateral, because that's what you're doing in this capacity. You're putting the asset up as collateral, the same as if, hey, you got a paid off car, you really are hungry for a 30% APY loan, and you go down to a payday store. What do they want? They want the pink slip to your car in exchange for that loan back, right? So that's the only instance in which you do not pay taxes, is when you take a loan out and you put something up as collateral. Now, when you do a real estate swap, it doesn't matter what you're doing. And you guys will see this even in your Coinbase account. If I take Bitcoin, let's say I bought my Bitcoin for 50,000 and then I swap it for XRP and I had a profit at that point, that is still a taxable event. You guys do not get to skirt around that. If I take my Bitcoin and I sell it and I swap it for a property, even if it's instantaneous swapping, that is a taxable event. The only capacity in which you do not pay taxes is if you take a loan out against your asset. So he is correct in that. However, I have discussed many times that, hey, the reason that I have a hybrid strategy is it gives me that ability to build positions over time, right? Whether it be XRP, even if you guys consider Bitcoin and ETH to be the best assets over time and you're happy with 4, 5, 6Xs, everyone's in a different spot in their life and maybe that's more than enough for you. There's still more power in recompounding and paying those taxes over cycles than just keeping absolutely everything in your account and just saying, you know what, I'm good to go. Maybe you have one of those jobs where you have $400,000 in disposable income every single year. God bless you. I'm glad for you. But that's not 99% of us, right? We need to recapitalize with this investment money, and just letting it and watching it go through this to the bear market and leaving the entire bag in there is leaving money on the table. So I'm not saying there isn't power in what he's talking about, because it is part of my long-term plan, but it's to continuously build that bag a little bit bigger each time and capitalize on that volatility. You will not be able to stack as much XRP, Bitcoin, or otherwise by just buying and holding through each and every cycle. You will make absolutely exponentially more money by selling a good chunk of that bag into each peak and then rebuying it. Even if you don't catch the perfect top, even if you don't catch the perfect bottom, you will still make more money mathematically by buying and selling it into cycles. And of course, keeping a portion of that long-term bag in case you're wrong. And of course, that continues to be tax-free until you guys sell that item. That is the big benefit of keeping assets long-term, is you do not pay taxes until you sell it. So If you do come into that point in your life earlier where, let's say, we have the opportunity to leverage against it, yeah, then that's absolutely something you can consider. But still, guys, to throw all this conversation about leverage, you never want to leverage your life in a capacity to where you get all these amazing toys and things in your life, and one market correction ends up lasting longer than expected, and then you have to start giving that life back away because you've over leveraged it. No matter how much money you make, please always have enough in your account to get you through unexpected periods. Live below your means. Don't overextend yourself. Over leveraging is not the same as leveraging, right? Leverage is taking other people's money and helping it work for you. You don't want other people's money to work against you, right? That's high interest accounts like credit cards, right? Putting big purchases on 30% APY credit cards works against you. People ask me all the time, hey, what should I be investing? Should I be doing this and that? They got $30,000 in credit card debt. I'm like, hey, that minus 30% is absolutely killing you. Like, there's no point in parking any money in a 5% account right now when you got 30K that's you're paying 30% on, right? Like, there's this huge inequality. So bottom line, don't over leverage your life. Even when you come into new money, make sure you treat it as a gift. Make sure you're continuously putting enough away to help yourself to be prepared for unexpected events. Nobody expected 2020. Nobody expected their business to shut down. Nobody expected their savings to be drained over an 18-month period, right? So I just want you guys to consider those things as we get into these next bullish periods. Taking profit, yeah, that's one part, but then preserving it, that's really where the hard work comes in, right? Being diligent, being just as disciplined as you were contributing to your fund this entire time as you are preserving it after you get it. So I just want you guys to think about that. We're not going to always have this incredible volatility within the crypto market. It eventually, over time, will subside and the gains on the table will be less, although much more than the stock market. So please, guys, take each and every cycle as a gift. They will become less volatile, in turn, less lucrative.
Wise words, Matty. Really wise words, and something that we should all be looking forward to, but also look forward on executing and having a game plan. I can't tell you how many people around cryptosphere right now I have talked to that don't have a game plan, that don't know what prices they're selling at, how much they're selling at those prices, when. So then you have to ask, bear the question is oh, do you sell off your feeling? Do you sell when Twitter sells? When do you sell? And that is just a crazy mindset to go into what you think is going to be a life-changing moment and not go in with a strategic approach. I will never back anyone that goes into an approach like that. So that's why we got to be forward-looking, Matty. We got to think about what are we going to do post our crypto profits, because you were just talking about I mean, I know some of you in the Discord, and I'll speak for myself as well. Some of us have had to eat shit. I was eating shit in college, paying all the nonsense, and then, taking all that crypto and or taking all the money, investing into crypto. And that's what you have to do for periods of your life. You think I had a work-life balance in college? Hell no. It was a work balance. And, and then we were doing all the shows and stuff. And so, you got to eat shit a little bit before you get to the promised land, And so this is where we're at right now. If you're with us, or Matty, I know your portfolio is up, my portfolio is up as well, and we're getting ready for this profits, but we have to look long term. What does our life look like with this pivotal moment? How does our life gain in momentum past this point? Do we take that money and go on vacation and screw off and think the world's a giant playground, or do we invest that into real estate and get cash flow? We get, the tax benefits. Then we're able to use tax strategies like 1031 and then use the exchange and go into other properties. These are the things that we need to be using. And then appreciate, I had to pull up my stat here. Appreciation. We're able to use leverage. And Matty, I have this whole real estate game plan for me. And I've talked to, I think, enough people. I need to talk to two more superiors that I truly respect here. And one of them is Dan. I need his honest opinion about it because he's been around for a while, and fundamentally gather what I need to go into. But that's me thinking about after crypto profits. Like what do you guys think about right now? What Lambo you're gonna buy with your crypto profits? How does that help your kids? And that's just my mindset. That's just my mindset. So Matty, give us some truth here. We went a little bit over. We could have spent a whole probably 2 hours talking about this. Give some gems here to wrap up the show.
Yeah. I think that one of the big things that people try to do, especially at this point in the cycle, regardless of of why you're starting at this point. Maybe you just found out about crypto. That's fine. Maybe you've been in kind of dabbling in and out of cycles, and you kind of come back when things get exciting because you want to buy into momentum. Not to say there isn't like some great strategies buying into momentum, but it does require a little bit more skill in order to do so. I would say that my biggest piece of advice for you guys is not to try to change things up too frequently and continue to chase new things. It's too easy for you to look at, hey, I bought all these things a month ago. This is what the performance is, and I'm gonna take everything that didn't do what I thought it was going to do in a month's time, and I'm gonna eradicate it from my portfolio. I'm going to fill it with some new things. That generally will leave you in a spot where you just are constantly frustrated, constantly on Twitter chasing whatever the biggest hashtag are, or on whatever deck screener looking at whatever the highest volume meme coin is. More often than not, people will sometimes build up a little bit of a bag because they got lucky on some things, but then they end up giving it all back away because they think that that's going to keep giving, right? It's like going up to the roulette table and then, hitting it really big off of your first pick, and, you walk away with a big cash, but instead of, just walking away, you walk over to the craps table, or you go over to the blackjack table and you double down because it's just such an exciting feeling, right? And I know that that's a normal thing. And these exchanges know that. They know that with the sounds that they make when you make a purchase. They know these. It's just like a casino, guys. They know that there's a satisfying sound when you make that cha-ching when you make a purchase, or make a different sound when you make a sell, right? They're very aware of these things. So understand that these environments are crafted to play on your emotions and to get you guys to get in and out of trades. You see these guys in movies that, sit there and they're, aggressively trading and they're making 500 trades a day. They're not, guys. Like, most of these guys who run big funds are not making a bunch of daily trades. I promise you that. Like, they're sitting there, they're making tactical decisions. They let their trades play out for quarters or years at a time, and then they close those positions. Sometimes they'll hedge against themselves if they have to, and they'll borrow and re-leverage the position, and they'll do it. But you guys are not them, right? You guys don't have those same tools and resources. You guys do not have that same technical training. So understand the illusion of thousands of trades equals more profits is not the truth here. In fact, if you can just hone in on a handful of assets, sub 10 assets, and then go ahead and capitalize on those. I'm not saying don't find other swing trades or leverage trade opportunities that can help kind of accelerate you along, but please don't feel like more equals more profits. I promise you it does not. You'll need a handful of opportunities to make you a really, really excellent, dollar amount. I know that we all have goals, right? You look at your vision board, you say, I got this many dollars I want to make $100,000 this year. I want to make $1 million this year. I want to make $5 million this year in crypto. And that's fine. But understand what needs to get there. Don't idealize the absolute pinnacle of outcomes and say, well, I've put this much in the market into these assets, so I'm going to reach the absolute top targets. In fact, take your expectations and chop them down to the worst case scenario and say, this is going to be the outcome. And if so, am I still happy with this, right? If you are, great. And if you're not, then what can you do here? The only other things you can do is maybe look to see if there's other, excessive spending in your life, other discretionary items that maybe you're spending on. Look to reallocate those more heavily into those assets. But please, guys, do not jump into an asset thinking 1000x equals the answer, and I'm going to do these 3 opportunities and I don't have to do anything else, right? When you trim your expectations down and then they get exceeded, that's a better feeling than setting your expectations too high and then seeing them, only be fulfilled by, let's say, 25%, right? So again, I think there's a lot of excitement left in this market. I think there's a lot of profit taking that we're going to be doing well beyond take profit 1 in our coin library. But like I've always mentioned, TP1 should be very aggressive because we don't know what's going to happen, right? But just like the last party was cut short with the Fed, nobody could have told you that the Fed was going to just change their tune all of a sudden and say they were lying about inflation being sticky and then double down on rate hikes for the next almost 24 months. So things happen that are out of our control. C19, out of our control. We always want to do a little bit of TPing so that way we can at least have some money back, some profit, and then everything beyond that is a gift. All right. So just guys, be investors, don't be gamblers.
Love that, Matty. Actually, Matty, I'm only selling at the 8 Fibonacci, so I don't know about you.
8 or bust.
I like, Matty, everything you just said right now was so on point. Team, we went a little bit over, and so if you like this topic, because I wanted to go in deeper with Matty here, deep into this topic, because it is valid. You don't see anyone on YouTube talking about what they're doing post-crypto bull run, because they don't even have a plan of what they're doing this crypto bull run. Our plan's set in stone. If you're a Crypto Charge member, I showed you in my Notion what I'm doing, how much crypto I'm holding of each crypto, at what price targets I'm selling, blah, 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 blah. Plan all done with a math problem done. I know Matty's already done, and I know the crypto platform. You go in the coin library, you can see it all, and you can figure that plan to whatever, you want to do. But, you have to sell at something, and it better not be later. It better be sooner. You better start taking profits when it makes sense, not 100x and you take your first profit. Right, Matty? So,
right.
Anyways, team, a lot of alpha from you today, Matty. I'm glad we were able to talk a lot about this. This is either going to be our one-off show where we talked, super motivational, I was showing Matty a Grant Cardone video last week. It's like, if you make $400,000 a year, like you're poor or whatever it was, Matt. It's like,
how does anyone live on $400,000?
Yeah, that's what it was.
By the way, guys, the average American lives on like $32K a year, so it's very possible.
It's just funny, but I was telling Matt what I got out of that is like, don't be content. Don't be content with this crypto bull run. Don't be content with the next one. Have a game plan, and there's a saying that goes around is like, you make plans and God laughs, which is hilarious because it's true. Like, you don't know the outcomes of where your life's going to take you, but you do need to be strategic. And if things open up for you, then you got to make a calculated decision of where you're going to take your life. We're all given opportunities, and we either take them or leave them on the table. You let me know what you do, but every opportunity that arises, if I see XRP, I take profit one and XRP is going crazy, this again goes into strategy. Like, I'm going to have the option to sell my third bag, my last bag, in that 8, if that 21, if it goes to that. I'm giving myself that option here for a crazy egregious price. I know Matty's talked about that a lot. So team, like, put your cards on the table here and make some decisions, because the time is here to, get our money. And then, I don't know if we'll see you in the Discord again, and you might move to Prague or, one of these weird, I was telling Matty last week, hey, I'm going to hear in the news that, I'm never going to hear from Matty for like 6 months. He's going to contact Crypto Moonblaster and Crypto Cater. Hey, take over, guys. I'm going out. I'm going to Belgium. I bought 3 mansions. We're going to see him in the newspaper, so I hope that's all of us, guys. But that is all we have for today, team. If you got some value out of this, like it. And if you want us to talk more about it, leave it in the comment section down below. But we'll see you on Wednesday, 2:30 p.m. Pacific for the Ask Matty show. But until next time, team, bye.